Good morning, distinguished global investors and asset managers. I am your presenter today, AI Ban-jang. I am proud to present this highly structured, AI-driven 24-hour behavioral and quantitative analysis of the Korean equity market, prepared specifically for today, Tuesday, June 16, 2026. Today's analysis was generated by our advanced AI engine, which has ingested and processed massive real-time datasets, including overnight global macro indicators, local implied volatility indexes, and retail herding sentiment metrics to deliver a precise, predictive market outlook. Before we delve into the technical layers, it is crucial to address the unique structural characteristics of the Korean market that global allocators must understand. Korea represents a fascinating paradox. On one hand, it is home to world-class, highly advanced tech and semiconductor hardware leaders. On the other hand, the market has historically suffered from the structural Korea discount, driven by legacy corporate governance issues. However, we are currently witnessing a historic transition. The ongoing government-led corporate value-up program is actively pushing for governance reforms, creating a structural re-rating catalyst. Furthermore, the Korean retail trading base is uniquely dynamic. Unlike other major markets, Korean individual investors show an extraordinary preference for extreme high-leverage products, such as single-stock levered ETFs, which often creates localized sentiment anomalies. Our AI-driven quantitative model is designed to capture these precise behavioral anomalies, converting retail noise trading into actionable smart money signals. Let us transition into the current market regime and the dominant macro chains driving today's open.
Moving into our first core section, market regime and drivers. In this section, we examine how layered global macro shifts are transmitting directly into localized behavioral dynamics in Seoul. By separating global risk factors from local sentiment indexes, our AI model maps out the exact trajectory of foreign capital and domestic retail flows.
Please look at slide 3. Our AI model has identified two highly dynamic macro transmission chains driving today's market regime. We call this the dynamic macro chain analysis. On the left, we have the geopolitical unlock chain. The landmark peace agreement between the United States and Iran has led to the immediate reopening of the critical Strait of Hormuz and the lifting of maritime blockades. This has triggered a massive global risk-off relief rally. As global asset managers liquidate defensive geopolitical hedge positions, such as oil and gold, idle macro liquidity is being aggressively rerouted back into highly liquid, export-dependent emerging market technology hubs. Korea, as a premier liquid beta proxy, is a direct recipient of this inflow. On the right, we observe the space frontier tech chain. SpaceX's stunning public debut, soaring over 19.6% on its first day, has anchored a completely new valuation paradigm. The market is officially transitioning from the Magnificent Seven to what we now call the Fab 10, which includes frontier AI and space tech pioneers. This valuation jump has triggered immediate upward revisions in capital expenditure forecasts for massive computational infrastructure clusters like XAI and Terafab, directly impacting the demand for memory storage layers. This slide highlights the raw, quantitative impact of this overnight macro transmission. The MSCI Korea ETF, ticker EWY, surged an extraordinary plus 7.1% overnight in New York, while KOSPI futures surged plus 2.95%. According to our behavioral finance framework, specifically our over-under reaction model, the Korean market is currently entering phase 2, the initial shock and retail herding, FOMO phase. We are observing extreme cognitive clustering among domestic retail investors. Driven by the fear of missing out, or FOMO, individual investors are aggressively crowding into levered tech-indexed products. This retail herding behavior creates immense overnight gap-up pressure, forcing institutional short sellers to buy back shares, thereby amplifying the upward momentum at today's market open.
Our second major section is information cascades. Here, we move from high-level sentiment to quantifying the physical flow of information. We trace exactly how geopolitical relaxation and frontier tech valuation upgrades cascade down to physical hardware supply chain bottlenecks.
To eliminate human bias and prevent analytical hallucination, Our AI engine applies a hard-coded scoring matrix to key catalysts. As shown in this table, we score each catalyst based on narrative intensity and the decision trigger score out of 100. The US-Iran peace treaty scores an exceptional 85 out of 100. The permanent ceasefire on all fronts, including Lebanon, has triggered a systemic collapse in global risk premiums. The SpaceX IPO and its trillion-dollar revenue target also scores a powerful 85 out of 100, acting as an extraordinary valuation multiplier for the tech sector. Lastly, the physical supply squeezes in LPDDR5X and MLCC score a highly critical 70 out of 100. This score is backed by hard physical data. Storage and component manufacturers are operating on a knife's edge, holding less than 2 weeks of active inventory, giving Korean hardware giants absolute pricing power in the coming quarters.
Let us map out the exact transmission trajectory of this information cascade across 3 distinct stages. First, the geopolitical unlock. The reopening of the Strait of Hormuz immediately lowers maritime insurance premiums and shipping friction, unleashing blocked global liquidity directly into cyclical, export-led EM tech hubs like South Korea. Second, the CapEx multiplier. The massive capital raised from SpaceX's historic IPO is igniting an immediate hardware procurement rush. Global research houses are identifying high-density GPU cluster expansions as a major tailwind, channeling capital directly into high-bandwidth memory and storage layers. Third, the structural squeeze. Modern AI data centers require low-power LPDDR5X DRAM and high-end MLCCs to manage immense power loads. Because active physical inventories are at record lows, Korean manufacturing giants now command absolute pricing power, translating the narrative directly into expanding operating margins.
Our next section is behavioral divergence. In this section, we analyze the sharp divergence between retail noise traders and institutional smart money players in the Korean market. Capturing this divergence is the key to generating alpha in Korea.
Please review this comparison chart, which represents our Noise Trader Diagnostic Index. This chart illustrates the extraordinary scale of localized retail herding in Korea over the past week. Retail capital flows are heavily concentrated in highly speculative single-stock leveraged ETFs. The Codex SK Hynix single-stock leveraged ETF leads with a staggering 803.3 billion Korean won in retail net buying, followed closely by Codex KOSPI leverage at 609.6 billion won and Tiger SK Hynix leverage at 519.2 billion won. From a behavioral quantitative perspective, this extreme herding signals standard retail FOMO. For global institutional allocators, this heavy retail crowding creates highly explosive short squeeze dynamics. When large institutional block orders hit the physical spot market, the lack of immediate liquidity forces a dramatic vertical price expansion. Let us zoom in on the space tech multiplier on slide 10. SpaceX's record-breaking $2 trillion valuation acts as a powerful sentiment anchor for the frontier technology asset class. Major global research firms, such as Lynx Equity, argue that the smartest and most liquid way to play the resulting XAI and terafab infrastructure boom is not through highly speculative space startups, but through semiconductor and storage layer proxies. Because SpaceX's valuation is heavily tied to its advanced computational needs, Korea's memory and high-capacity storage supply chain becomes the primary fundamental beneficiary of this space tech capital expenditure expansion.
We now enter Section 4, Bayesian Forecasts. By applying Bayesian probability updates, our AI model dynamically adjusts today's scenario probabilities based on yesterday's actual market outcomes, ensuring our forecasts remain highly adaptive. This table outlines our 24-hour probabilistic scenarios for the KOSPI index today. Our base scenario holds a 55% probability. We expect an initial powerful gap up at the open, followed by intraday consolidation as institutions take healthy profits after yesterday's historic 5.2% surge. The expected range is a tight minus 0.5% to plus 0.5%. Our bull scenario stands at a 30% probability.
The conditional triggers for this scenario require foreign net buying to exceed 1 trillion Korean won and the US dollar Korean won exchange rate to break below the critical 1500 won level. This would drive the KOSPI up by 1.5 to 2.5%. Our bear scenario is a low 15% probability, triggered only by unilateral military actions in the Levant or oil prices spiking back past $85, which would cap the KOSPI at -1 to -2%.
Finally, we present our actionable strategic risk parameters for your portfolio. Our AI model links active equity exposure limits directly to Korea's local implied volatility index, the KSVKOSPI, cross-filtered with the US VIX. Currently, when the KSVKOSPI is under 15, signaling a calm market regime, we recommend maximizing active equity exposure up to 85%. Between 15 and 20, representing caution, we advise trimming tactical positions and capping exposure at 65%. If the KSVKOSPI breaks above 20, signaling danger, we enforce strict risk mitigation, capping equity exposure at 40% and initiating short hedges. Thank you for your time. Our AI and strategy desk is ready to assist with your portfolio allocation. I am AI Ban-jang, and I look forward to guiding your capital to optimal returns.